Hey guys, we're live with Kevin Green. This is the Commodity Report. A lot going on the last couple of weeks, and some interesting developments happened last week and coming into this week. And those developments for me are lumber and copper. So lumber had a massive band squeeze breakout, and of course, as I say this, I'm like, I probably need to pull a chart up to show everybody how awesome this is, and then I forget to do that. So sorry about that, guys. But I will bring up a chart in a second. But just talking about lumber, lumber is very important to the economy. It's very important to the world. It's not as important as copper, but it is a signal that I use for finding if the market is in a growth period or a growth slowing period. And so looking at lumber, we're seeing that we are in a growth period. At least that's what lumber is telling me. That doesn't mean it's going to show up directly that second, like somebody's going to say, oh my gosh, it's not showing up in the actual PMIs or any of the fundamental data. Yes, I understand that. I'm saying the price action front runs the fundamentals usually. And so because of that, I always want to pay attention to things like lumber and copper and see where they're moving. So here's the lumber chart. Of course, then I didn't delete the charts. I'm sorry, guys. I'm just completely messing all this up right now.
It's
Okay.
Monday.
It's Monday. I love Mondays, but we're absolutely in this period. So, okay, here we go. Got the chart. All right, this is why Sam's coming. Sam should be here soon. He's the youngest out of all of us, and he doesn't know how to work StreamYard. We'll figure it out. We got you, Sam. Sam will be here soon. The charts will be better, a lot smoother. So looking at this lumber chart, so what I'm showing you guys here is this band squeeze breakout. So when you see these reversal patterns, there's not many reversal patterns that look better than this. This is a head and shoulders reversal bottom. It's an inverse head and shoulders. Think of a person standing upside down. That would be what an inverse head and shoulders kind of looks like. And this signifies a reversal. But you don't just want to buy when you see a head and shoulders forming. You want to see it break out of that pattern. And the best form of a breakout out of that pattern is a nice band squeeze. So we saw a band squeeze happen at the end of that head and shoulders pattern, and then it broke out of it. And that's a really, really, really big signal. That's one of the best signals that you can get for a commodity. Commodities tend to base. They V-top and they base at the bottom. So this could be the beginning of a new trend. Either way, it is in a buy signal. Granted, I know a lot of people don't trade lumber, even though the LBR contracts are much more liquid than the LB contracts were. So you can trade those futures, and they are a little bit smaller size as well. But I would, just look at it and go, what does this mean for the broader commodity? Or for the broader commodity and the broader market. And then I'll also bring up, I'll wait for Sam to come and do that because it's his chart for copper. So Kevin, what are you seeing out here in the market? Anything sticking out to you for the election or the market or anything that you're thinking about right now?
So Jason, I mean, you're talking about lumber, right? And that chart setup looks really good, but we need to talk about something different. Okay, let's talk about the chaos that's going to ensue here, and we got to make sure that everybody's prepared for the election. You got to make sure you got your silver. I actually brought some props today. You got to get your 1 ounce silver going. Okay, hold up. I got some more.
Do you bring a bullet?
You got your mountain house. Don't want to miss any Taco Tuesdays. You got to get your seeds ready for the garden.
Nice.
In case. I mean, we're talking about apocalyptic things happening here. Where's that Glock that I had?
Kevin's bringing out his stash.
I'm just kidding. Look, I think you have a really good thing there when it comes to lumber, right? You are having the expectation that rate cuts might continue to spur growth when it comes to the housing market. I'm not too sure how that's really going to play out, right? If we do cut rates, are you going to see more individuals that have been sitting on the sidelines trying to get into existing homes? Are we going to see existing homes kind of flood the market? And is there going to be some more competition compared to those home builders, right? Which the home builders are the ones that really are a good indicator for lumber in general. So I think that's kind of the back and forth that I have. But when you kind of look at that chart setup, yes, you can make a case. Okay, maybe it's going to try to approach and make an attempt to the high here. And you know that when you're talking about the softs or when you're talking about like a lumber contract, it doesn't really take much to keep momentum going and moving higher. And so that's something to be mindful of. But you got to be really tactical. Even though we do see a little bit more liquidity within that contract, you still want to be very tactical when it comes to your positioning here. So I think that's one thing that I'm keeping my eye out on. We can talk about copper later. We did catch a little bit of a bid when it came to crude oil. That's after, you had Iran kind of signaling that they will respond to Israel, and it's going to be more than just missiles, ... What does that mean? No one knows. So you got a little bit of geopolitical risk premium getting put into these contracts. You also have OPEC confirming that they are not going to increase production by 180,000 barrels per day starting in December. That's going to be pushed out. That's obviously, also a signal that demand is just not there for the supply that's in the market. But you also saw crude catch a little bit of a bid off of that. And then we had we had a poll that came out from Iowa that showed Harris could potentially win. I still think that might be very far-fetched, but you did see a little bit of a readjustment when it came to the expectations. And we talked about this last week. The crude market is probably going to short a Trump win because of drill baby drill. And then also in the past, he's leveraged Saudi Arabia and other Middle Eastern partners to really bring production online and try to hurt Iran, which obviously, once again, can add fuel to the fire when it comes to that negative positioning there when it comes to crude. So decent pop. It's pulling back here a little bit, but just be mindful of that. That geopolitical risk premium can be taken out of the market at any time. We saw it early last week, if not the week before, where we dropped like 4% in a day and things of that nature. So those are the things that I'm keeping my eye out on. Yields are lower today. Actually did see a nice little bounce intraday, but I do suspect that yields will actually move lower for this week, towards the latter half of this week. If there's going to be a risk off type of trade, Treasury should be the beneficiaries of that, in my opinion. And I think that if you are looking for a flight to safety, the dollar could also kind of hang in there. I'm not going to say it's going to completely just like rip to the upside, or even if we do see a pullback, I don't think it's going to be a massive pullback with the dollar. I think it's just going to really kind of hang in there. So that's what I have on my radar this week. And everybody's focusing on the elections, and rightfully so, but we also have a Fed meeting where we're expecting to see a 25 basis point rate cut. That's like 99% being built into the market right now. I find it very hard for the Fed to actually cut in November based on the economic data that we've had. X the jobs report that we had on Friday. So I'm keeping my eye out on their commentary on the reason for the cut. So that's my big thing there.
So lot to unpack there. Number one, thanks, Dave. I do also want to bring up Kevin's items, man. That was funny. But it's the truth, right? Like that's kind of like the thing we see before every election, and it's like it's a thing it's hard. What was the book called? Triumph of the Optimist. And basically, like, if you look at markets in a way where it's always like doomsday, you'll never make money over time. Yeah, sure, you could. There's people who run entire newsletters, and I'm talking some crap right now, but it's just the truth. There's people who run entire newsletters, and their idea of it is we have never missed a crash. And once again, most of these people, they haven't missed a crash, but they're always short. So they're always losing money, and sure, they catch the crashes, they catch a pullback, they catch all of these things, but they're always short. What side of the market do you want to be on, or what side of life do you want to be on, really? Let's take it to another angle, which is like, do you always want to be so negative that you think the world's going to end every time an event happens? I mean, that sounds like a very miserable existence. And I'm not saying like, hey, there are things that happen. Prepare for them. I am also a person who's I'm a prepper. I prepare for things. I don't know what the future will hold, but also I think that most of the time society isn't that bad, and people don't want to mutually assured destruction. So because we don't want all these things, most of the time the world just continues on. And then after an election, every single time after an election, the world has continued on. So I don't think that we're all going to die. I don't think it's the end of the world, but I do see a lot of this coming out right now. And it's like, I think this is what catches the market off guard most of the time, and which is why you see the market just kind of skyrocket up afterwards, because everybody's like, oh, and you said this the other day, Kevin, which is markets hate uncertainty. And that's the truth. Markets hate uncertainty. So once the election's over and we know for certain, we can move forward. Also, speaking about something you brought up the other week, Kevin, you were talking about the predictive market and the betting markets, and saying that there was a huge spread in there and it didn't make sense between the polls and the betting markets. And then you said that probably Camilla is probably going to come back and maybe even win the election, but definitely could spring forward into the betting markets. And she has. So at the moment, I think it's 53% or 54%. I'm not sure. So what did you see there, Kevin? So you could tell people, what they should be looking for and how to pay attention to things like that. Because that was a really big call. Really good call. So kudos to you, man.
I appreciate that. Yeah, there's a lot to unpack there. Let me actually just pull back, right? So you guys, it is funny, but like these are actually the items that I have at my house because I'm at ease, right? So like, let's just say this: I'm an optimist. I'm always trying to be an optimist here. But if you ever had a fear, like should be like the first thing that you put your actual dollars to. Like it shouldn't, like if you need money, like you probably should buy things for any type of an event. And we kind of laughed because it's the election, but honestly, if you're looking at like any type of weather events and things like that, like you need to make sure that you are kind of prepared for anything that can be thrown at you. It doesn't mean that you got to go like full bore, like buy a bunker or anything like that. But it does actually put your mind at ease. Hey, if something were to occur, what could I do, right? And I'm not going to get into the whole prepper thing, but you can be a prepper and not be a weirdo. It's completely normal for you to say, hey, I mean, I have a son, right? Like, hey, little man's going to really want to still have his tacos. Like, I'm going to make sure that I got those set. And when I use this as an example here really quickly, COVID-19 is actually the best example. I started actually kind of preparing myself because I've actually been in tornadoes that have like completely destroyed neighborhoods, and we've had power out for 3-4, like this was back when I lived in Illinois, but I've had these type of scenarios. So COVID-19 was actually a really good example. Everybody's freaking out, going to the grocery stores and stuff like that. And it was just kind of like people were just pulling off everything off the shelves, except for, I find this very funny, except for gluten-free anything. If you noticed, and I'm on a complete tangent, no one wanted gluten-free anything, not the pasta, not any other stuff in the it was kind of funny, but at those times it was like, all right, cool, I'm not going to eat a steak tonight. Like I don't have to really worry about that. It kind of brings your anxiety down. And I think that's also another thing that we also have to keep in mind too. It's all about your mental health. And so like for me, it's kind of like, yeah, we got an election. This is going to be fun. I'm going to crack a beer and watch how this whole thing pans out because I'm not really too worried. Like at the end of the day, what's the worst that's going to really happen? I think that I, for the most part, am going to be prepared for those type of events. That's my little tangent on that. So don't think that you're a weirdo if you actually prep and get your stuff together. We're not saying this is going to be the event. I just thought it was kind of funny because everybody is like,
yeah, no, let me add to that for one sec before you go on to the next one, because I agree. Obviously, I mentioned that I also do that as well. And I think that's also like, it's very, what I wanted to bring up is how that also pertains to trading. So like, once again, it's the same thing. Like if I'm just trading my strategy and I don't have to worry about it and I'm just following my methodology and I can sit and wait for my signals, not be in cash for long periods of time, be in no cash at certain periods of time. The reason I can do that is because I've put money aside. My life is taken care of. My family is taken care of. If something bad was to happen to the world, even being stuck in my house, I'd be okay. Like Kevin brought up that idea about steaks, and it's funny because it's like, yeah, that's true. In the event of something really crazy happen, the only thing you really need is either food you eat. You don't really need that many grains. Like you just need the food that you need. For example, like we started buying during COVID, we started buying freezers, deep freezers. So we bought a bunch of deep freezers. Like we have meat butchered from a farm that we actually know, because I don't eat grocery food. So buying it from a farm that we actually know, getting that all in, knowing that that's going to be there no matter what, with a generator or whatever you do, like that stuff is really important to just feel good and continue on your strategy, do the things that you do. And then at the end of the day, it's like, if the worst case scenario happened, I kind of have it handled. I'm okay.
Yeah. So, and we, because I know I do have to get off at 50 past the hour here, but because we're going on a tangent, but I think this is actually very, very helpful.
It means a lot right now because there's a lot of people going, holy crap, it's the end of the world.
But going back to buying the beef, and you can do the same thing with pork, you can see the same thing with chickens and stuff like that. if you buy your food directly, one, it's like so much more healthier. Two, you really do help a farmer out or a rancher out, because that improves their margins going from 30% to like 70% immediately. And they usually will give you massive deals. So sometimes it's like,
Massive.
oh, you buy a quarter cow or buy a half a cow, like go in your calculator, right? If you have a deep freezer, which they're actually pretty cheap. I mean, you can get a deep freezer for like $250.
200,
over
300
time.
bucks.
Yeah. If you go and do the back of the math, you could get your beef, 30%, 40% off what you see retail. And that actually does add up. It's an outlier, you're spending $1,200 to start, and that sounds very steep, but if you kind of look at it, you probably are going to be saving another 800, 900 bucks over time. Okay. Enough about the preps. Enough about the preps. All right. So what other markets do you kind of want to touch on here?
So let's get into copper. So what I wanted to do is talk about copper today, because I think copper to me is one of the ones that's just sticking out. This is a chart from Sam. Sam had this one. Sadly, his computer isn't working today. Sorry, guys. So you're stuck with me for the charts. I'm really sorry about that. But anyways, getting to copper. So for me, copper has been, it started to bottom. It's actually been in a buy signal, but this pullback and consolidation has gotten very close to our stops. Right now, it looks like today it just broke out of this zone. So getting back up and above VWAP support. The PPO actually crossed over today. So it actually looks really good for another move higher in copper, which also adds to the move that we just saw in lumber. So that also means that you can buy things like specific equities, especially in the copper mining sector. The metals and mining sector actually looks really good if it has a breakout. And I think that's the thing that a lot of people aren't paying attention to right now. If you think about it in this way, where you go, okay, I don't know what exactly the election is going to bring, but I know for certain that it's going to resolve these ranges, and these ranges are going to move higher or lower out of the election. I think higher. That's my bias, but that's just a bias. It doesn't mean anything. I'm just saying that, like for the dollar, even the dollar might break down or it might break out after the election. If you're looking at the XME or the KRE, for example, which has gone back into a range, small caps, which went back into a range, all of these things, they could break out and start to move after the election. So I think that's the important thing here, is saying some of these are hinting right now that the market, like small caps, the regional banks, and so on, are probably going to move higher after the election. But after the election is really when that trade's going to start. So this is the hardest thing to tell traders to do, which is sit on your hands and then wait for the event to happen. And once the event happens, then we can possibly get into the next move for this market, which might be higher.
Yeah. So if you're looking at that copper chart too, if you take the lows that we saw back in late July, early August, and then create another, and make a trend line from the lows that we saw in September, copper bounced off of that trend line, right? And so it's trying to move to the upside. I always kind of go back and just say, like, copper usually triple tops before it's over with, right? So, I would say the primary trend for the most part, if we're going back on a historical basis, is right now on an intermediate basis is pushing to the upside. There is enthusiasm for the China trade today. So it's not only just copper moving up 1.4% right now. You also have Alibaba that's moving to the upside. That's up 1.56% right now. FXI up 1.28%. So the China trade right now is being kind of priced in here. So that's something that you could see. And then you could also have a resistance level for copper sitting around $4.67, if we want to kind of be a little bit precise here. But I think that there hasn't been anything that says complete failure on this contract yet. But you still need that China stimulus side of the equation to kind of rebound here. Now, let me give you the bearish take. Bearish take is net positioning on the long side for copper continues to move to the downside. Okay, so you are seeing an unwinding for managed money. I tend to favor going the opposite of whatever managed money does, but you can't ignore it either, right? So we have managed money kind of unwinding their positions. That's going to be one thing to kind of focus on. Once again, kind of going back to the China thing, that's another thing to just be mindful of too in the near term here. So I would say structurally $4.67, give or take, area of resistance. I don't think that we've seen the blowout in copper yet. And we might have something that's a little bit more favorable when it comes to the fundamentals. The other side of the bearish coin here is China. Now, this is not going to be copper related, but China is actually reducing, or the expectation is that they're going to reduce the refining operation or the refining output in Q4 just because of that lack of demand. If you kind of look at that and you say, okay, well, if you're going to reduce your amount of refining when it comes to oil, are you really kind of seeing a ramp up in demand in other areas of the market or in industrial metals? Is your smelting operations and those operating rates, are they still going to be elevated, or are we going to see smelting operations kind of move to the downside, right? The utilization rates of the smelting. And smelting is just kind of, think about smelting as like the refining of copper, right? It's the melting down and making it into pipes or copper blocks or whatever you want to make it into. So I think there's still, it's like a 60-40 split for me right now, right? It's just a show me story. All of these commodities are a show me story. Crude, oil, show me that there's actual demand there. Because everything that you've seen on these pops are all geopolitical driven and supply constraint driven. There's nothing that says, oh man, demand's actually moving to the upside. Grains, export demand, especially when you're looking at corn, looking really great here. Is it going to last? Is wheat demand going to last? Wheat has saw a little bit of a pop, but that's because the quality of harvest for certain wheat for the last 2 weeks has been somewhat and remotely weak, right? And so like for long sustained trends in any commodity, for me, I need to have the fundamental story that says demand is there and it's not just supply. Because if you have supply coming off, it should sustain prices. But just like with OPEC, what if oil doesn't move and it continues to slide? Is OPEC going to actually have to cut more? Is the expectation that you have to take more out? That's not bullish for me. I mean, in a near term, from a technical standpoint, yeah, you can make a pop off of it, but that doesn't give you a sustained bull trend. And I don't want to sound negative on these products by any stretch of the imagination, because I think China can do it. They just need to execute. We just have to wait. It's going to take 3 months, 4 months in order for any of this China stimulus to show up. Obviously, I think we have to be patient with that. But yeah, that's the kind of the copper trade for me. This kind of got out of. Could you say it's a flag? Could you say it's a bull flag? Technically, yes, because our lows were still above the resistance highs that we saw last year at around 390. So, I mean, it's a very long flag, if you want to say that. Maybe it's a consolidation. Maybe it does push higher here. But I'm not 100% convinced when it comes to the physical metals. Oh, and let me say that again. When it comes to the straight up base metals like a copper or an aluminum, that this is the time to completely execute and go bullish. Silver, on the other hand, reflation trade, industrial, safe haven, higher beta gold, right? Gives you a little bit more of an opportunity upside.
Yeah, no, I agree. I mean, that once again, this is the same thing we continue to harp on every single week, which is when, like you said, it's a show me story. Like it's absolutely the truth, which is, can you, and this is the hardest thing to do as a trader. It comes back to the idea of technical analysis in the first place. Can you sit on your hands until a signal actually comes in? Can you look at a head and shoulders pattern? Can you look at this? And let's say don't even look at it for lumber. Let's say this is NVIDIA. Can you sit there when this thing is dipping and say, I'm not going to buy, I'm not going to touch this, I'm not going to touch it, and then wait for that to break out? That was 8 months. Can you sit on something for 8 months and then wait for it to break out? And once again, the easy answer is yes. Absolutely, you should be able to do that because it's that's the way you need to trade. Think of somebody like Warren Buffett. He talks about, people are talking about his cash hoard this week. I'm not talking about that. He's not a market timer. But what I am saying is that he has a very good way of explaining things. And the one way he explains it is if you're playing baseball and you're waiting for the right pitch, and you can just sit there and wait for the right pitch over and over again. Yes, you might strike out at some point. Luckily in trading, and like he says, we don't have strikes, so we don't strike out. So we could sit there and wait for the right pitch over and over again. Can you sit and wait for it? And the election, after the election, is going to tell you a lot. We've waited for the right pitch. Then we get a breakout, one direction or the other. Like in all the areas like Kevin and I are talking about, these are areas that could go either way. These aren't areas that I'm very bullish on or very bearish on. I just think they're either way. They could go either way. So once again, I'd say sit on your hands, wait for the election, then start swinging at stuff. You're going to get signals after that. But if you don't, you still don't. Just wait for the signals.
Yeah, I agree. You could also kind of look at the late 70s, early 80s as also a template too, right? Like you're gonna have a Fed cut when I kind of just told you that the economic data is looking pretty decent, X the jobs report, which I do believe some of that was actually weather driven. And you could say, okay, well, are you going to see consumer demand kind of spark back up, right? Kind of just like we talked about there. So there could be an opportunity. And if that's going to be the case, then a lot of the physical commodities, maybe grains is just different right now. It's just different. We have to just be mindful. I mean, unless you have like a major logistical hurdle right now, it's going to be very problematic to catch a sustained run to the upside, just based on the amount of stockpile and inventory that we have, and the incredible harvest that we've had 2 weeks, 3 weeks before expectations, right? But if we are in that type of environment of late 70s reflation, I mean, those are going to be the commodities, the energy sector, some of the softs would be the ones to really try to catch a bid. And I think there could be a narrative and a story there for the lumber trade. I'm right there with you. I just feel like maybe the existing home side of it, right? Because everybody talks about new homes, people are still buying. Look at XHB, look at what this home builder and Toll Brothers and all. It's like, yeah, but they're in a secular shift right now. And if you kind of look at like existing home sales, right, we're pretty much, I think, 13, 14-year lows. I mean, it looks anemic. If you didn't even if you just looked at that chart and looked at economic cycles, you would say, yeah, there's a slowdown taking place right now. No one's buying. And so I also am of the mind, if you cut rates go lower, do we also see this, fracturing of, tectonic plates in the existing home market? And does that actually flood the market so much where new home builders kind of struggle? We've never had an environment like this.
I think it's why people say things like, and I don't agree with this at all, even though I am primarily a price action trader, which is, oh, the fundamentals are dead. You have to only follow the price and do these things. That's never been the truth. It's just markets front run the future. So once again, we're seeing this move in lumber today, it doesn't make much sense. In a year, it might make sense. Let's say it trends for a year. In a year, we might see, hey, there's this big boom globally and blah, 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 and we don't know. So once again, I follow the price because I think it gets me into things a little bit sooner than I can look at in the fundamentals, but I also know the fundamentals do matter. So if certain things do matter, like what Kevin said to me, how I take that is sometimes that's when the best opportunities come into play. When nobody's looking at it, and there's also, what's the cure for low prices? Low prices. What's the cure for high prices? High prices. So as there's low prices for things like lumber, people aren't there's less supply going on in the market. There's less people going out and cutting down trees to get lumber. It's the same way with all commodities. So that could start a new rally in something like lumber or even a copper or something like that. It's the same with all commodities. But also getting to the other point you brought up, Kevin, which is I still have this chart from the 70s. And so this is a really interesting overlay. So if we're looking at this and we go, okay, well, could we see this stagflationary 3 peaks 70s style environment? And the answer is absolutely yes. But once again, is it going to look exactly the same? Like these analog charts, like they look really cool. And trust me, I love to look at it and go, what could happen? However, you have to look at it and go, that was the past. The past will probably not look exactly like the future, but it might rhyme a little bit. So I still think that we do have a spark in inflation. I don't think that's going to be devastating for stocks anytime soon. I think it'll be good for stocks at first. I think it'll really be very helpful. And I think that brings us more into a 2021 style environment where a lot of things are going up. Inflation's coming back in the market, but the reason that I keep bringing this up isn't to just look at this. I think it's the new shift that we're kind of seeing in markets. And I'll kick it back over to you, Kevin, to hear your thoughts on this after this, which is the new shift in markets might be out of Things like bonds, long-term, long-dated bonds might be getting killed for many, many years here. I think the shift in markets turns into not that, we're going to get rid of all of our tech stocks and these are going to go to zero or something. That's a ridiculous take. I think the other take is looking at it and going, maybe it's brave at the moment to look at other sectors that haven't been loved for a long time, sectors that have been underwater, that would only do well in an inflationary environment, bonds that only do well in inflationary environments, which is very few. There isn't many of them, but there's only a few. And also looking at the idea of the 60-40 portfolio. Will that continue forever if bonds just continue to underperform year after year? Are bonds still a safe haven? So things like that might change. Hey, maybe gold's looked at like a safe haven in this coming environment. I don't know, but my main point is that this environment is changing. I don't know what that change looks like. I don't know exactly which commodities do best in that environment, but I do see that we have so much debt that the only real answer is kind of inflated away at a certain point. I'm not saying debt's crashing the market. Don't even get that thing, because that's been a thought for the last 100 years, basically. That's not my point. My point is just we do have a lot of debt. A way to solve it is probably inflating it away a little bit. And also that kind of leads us into this stagflationary style environment, which does make sense, but I don't think it's as devastating as all that. I think a lot of things will go up in the next year. I think the environment actually looks a lot better than a lot of people think. But I do think that it's something to look out for, is just shifting portfolios and the way we look at long-term retirement portfolios as managers.
Yeah. Okay. So for gold is a product and a commodity that usually breaks out, range bounds for 4 years, 5 years, breaks down, and then breaks out again. So we're in the breakout phase, and then that's why I would say it's really hard to actually call a top on this. Like I don't say I was trying to make an attempt, but I was like, 2,600 seems like reasonable at that time, right? That was 8 months, 9 months ago, and it continues to run. So you just kind of wait. The gold move will not stop until the Fed is done cutting rates. So that's historically, if you look at in the past, until interest rates find their peak or bottom, however you want to look at it, once they find their bottom, that's usually when gold kind of mellows out and then it'll range bound. So gold is a hot trade right now. Just be cautious with it. I mean, every speculator and their mother's in it. So you don't want to be the last bag holder. But I don't think that you're going to see this type of gold move sustaining itself in the manner that it's doing for the next year or 2 years. If that's going to be the case, I think we do have a different problem that is on our hands right now. I think this is a speculative driven. You have central banks that are eating up gold like nobody's business for now, and rightfully so. Geopolitical risk that's out there. A lot of these other economies and central banks are not in the same position as the Fed. The Fed is completely in control right now when you're looking on a relative basis compared to everybody else. So the gold move, let that run until once interest rates peak out, then they'll probably be range bound for a year or 2 years. So that's what I'm kind of looking at for that. And then silver, I think that's just more of we can call it the reflation trade, but I think that's probably the wrong thing, because people kind of misconstrue inflation for what they saw in COVID-19, which is not normal. That's not normal inflation. There's healthy inflation and then there's bad inflation. Healthy inflation is when you have wages exceeding the inflation rate. That's healthy for consumers, right? I'm making more money than what I have to spend on something, right? So let's just, and this is going to be a wild example, but let's say that we had wage growth of 10% and inflation was sitting at 5%, which 5% inflation, oh man, everybody's freaking out, but right, 10% wage growth on 5%, net, you got 5% realized growth. That's just an example. I'm not saying that's what's happening right now. That's how you kind of have to look at it. Sometimes we look at these things in a vacuum and we say, oh my gosh, interest rates, like we did, interest rates are at 4.3 now. Oh man, like the Fed's messed up and it's on the wrong side. It's like, no, actually traditionally yields actually do rise after the first rate cut, right? Like that's just how it is. I'm not, but I just think that we need to look at everything kind of like holistically here and not just like in a vacuum or in its own void. I would say that if in that type of environment that you're kind of mentioning, oil should be able to perform. It should, or at least stabilize. It should. Is it now? Probably not, but like it should be able to make a move here. I would also say, once again, natural gas. I am of the belief that natural gas is literally at the beginning of a cycle low. And I think that we will see natural gas kind of actually catching a little bit of a bid here and maybe some enthusiasm. That's my 2 cents. I know what the demand picture looks like. I know what the supply picture looks like, but I'm more 60%, 70% of me likes technicals more than anything that's a narrative driven indicator. I do like to have the narrative to be able to complement that. And I do believe that over the next year or so, we will actually see Natty catching a pretty decent bid. I'm not so certain it's going to actually be able to hold those prices, but if you kind of just look at a longer term chart, a monthly chart, you can see MACD bottoming out. You can see that we've been in this range, high-low range, where basically our lows, when we have lows, natural gas can double whatever those low prices are, which is phenomenal, right? When you're talking about a commodity, and not like when you're talking about an equity. With commodity, we care about what is the price now, what's the price in the future, what's the percent rate of change. And so I think right now we are at a cycle low or close to a cycle low when it comes to Natty. I think that one could perform. Diesel, I've been wrong on this, and I call winners and I call losers. I thought that we would actually see the shakeout in diesel a lot earlier, and we just have not. Now, I can also say a commitment of traders report, though, we're at really historic lows when it comes to net positioning or high net short positioning within heating oil and diesel. So I'm kind of looking at something there. Maybe there's going to be that pop. I think that's going to still be your forward leading indicator, and then also you have the weather events and seasonal events there. Copper, I think you have a structural story there. You have not only just the time it takes to get the mine up and running, but also on the other side of that, you have AI, you have China stimulus. Maybe we do have this rate cut and we do have this boom cycle in lumber. Outside of lumber, what else do you need for a house? You need copper, you need piping, you need metal, right? So those could be runners in the next couple of quarters or so. And like I said, my biggest one that you have to make a case for it because we're getting very near lows when it comes to price is the grains. But then on the other side, it's like, man, like you either need people to start consuming like nobody's business and everybody gets fat and all of the hogs get really fat and then the live cattle gets really fat and all of this other stuff, right, to be able to draw on the current supply that we have for grains, or you need to have a logistical issue. And I think that's kind of what that's hanging on right now for the grains. So, I don't know if that actually even answered your question, but that's kind of what I'm looking at. Like if you were going to have that scenario that you're talking about, we do have this steady inflationary picture that we're seeing there, then those should be the products that are able to sustain itself. And then I go back and say, okay, if gold does kind of like peak out at some point, I still think silver's your catch-up trade there.
Yeah, I think personally, I think more what I'm thinking about with gold is the fact that if you looked at it for a retiree, for example, and you said, hey, you want to hold this for the next, let's just say 10 years. Would I want that portfolio to be 60-40 bonds or 60-40 gold? And I would probably lean towards 60-40 gold at the moment, even with you're right. It moves in big ways. It goes sideways. It moves in big ways. It goes sideways. Can even have nasty bear markets at times. But I would think that the environment just kind of is shifting into that. And to also add to what you said, I grabbed a chart that I use this chart a lot, which is just showing like as the Fed's cutting rates, this is the 2s and 10s curve. So the Fed controls the short end of the curve. When you see this steepening, meaning where you see those blue arrows at the bottom, that's usually when the Fed is cutting rates. And you see that gold really likes that environment. We see yield curve inversions. That's the environment that gold kind of gets energy in it. You kind of see it just kind of go and it goes flat for a little bit. And then it starts to trend up. And now that the curve is steepening, it's trending up really nicely. It's created a very large move. So I think Kevin's absolutely right. As long as the Fed is cutting, we're going to see that. But then also there's an interesting thing when the Fed stops cutting. And that's when you usually see things like copper really take off and outperform gold. oil really take out and outperform gold. And we haven't seen that just yet. So once again, are we still going to continue to cut? And then gold's going to be the outperformer. And as soon as that changes, then these other things. So once again, it's the reason why the commodity market is so large and there's so many things to trade in it. One is you can trade gold right now. We have long gold trades. I'm long every signal for anything gold, silver related has been long for a while now. That's great, but at some point that will change. And then next thing you know, it's either going to be a more deflationary market, where you were shorting commodities, or it's going to be more of a reflationary market where we're long things that are these growth-based commodities that we're talking about, like lumber, copper. I think the idea here for me is that things like lumber and the copper chart that I showed you guys earlier, these things are starting to move, which is kind of telling me that maybe that reflation trade is a little bit closer than we think. And possibly I'll have more clarity on that. That's the thing about trading that doesn't sound very fun when you have an analyst saying, I have to wait and see. But that's the truth of trading. It's next week when we come on here, I feel like we will have a very good grasp on what direction all these things are going. And like you said before, we're looking at the grains. We've been talking about the grains for a while, and this is a perfect example of waiting for that opportunity and setup. We've been talking about the grains. The grains have had some great fundamentals most of the year. The price action never matched the fundamentals. And also it's because of the pressure put on it by cattle. So we haven't put on those trades. I've had a trade in wheat once. I had a trade in corn. I have a trade in corn actually recently. But they haven't gone anywhere. Nothing's really happened in those markets. And that's once again let's continue to wait. I'll take the signals as they come to me. We got a signal last week for these things. But once again, I don't have any fundamental backing to really get that thing to move like Kevin talked about. So next week, I think we're going to see some major moves. I'll leave you guys with something from the election cycle just to show you guys what usually happens. So right now is when we usually start to see the market trend up. And then the election happens, and then it usually has a nice spike higher. So I'm saying the best thing to do right here, right now, sit on your hands, wait for the election to get over. They say, this is the president. Then you're going to see the market move one direction or another, chase that direction. Usually that direction is up. Kevin, I know you have to go. Do you want to leave us with anything?
Yeah, I would say vol compression probably by this time next week. Hopefully, we'll see vol coming down. It doesn't really tell us what the direction of the market's going to be, but I think we do see vol going down. I would say be very careful tomorrow night if you are an overnight trader in the commodity space. It's going to be like, I'm not going to say don't trade it. I do because you set aside some money that you're saying, hey, if you went to the casino and bet it all on black or bet it all on red, that type of money, and you wanted to trade that, by all means, because it does get actually very fun. But it is nerve wracking, and it's something that you got to go into it knowing that you probably will lose everything. But it is, expect a lot of volatility tomorrow night. Once again, I've just been harping on this on every single platform that I've been talking about, right? Like, don't freak out. Right, we're all in this stuff together. We have to also kind of be mindful, like we are the ones that control our own lives in the community around us, and it's all about who you know. And don't let things that are outside of your control really, truly impact you from your heart or spiritually or however you kind of look at it. Like, we're going to continue to move forward as you kind of talked about, and that's what I got. So I appreciate you, Jason, as always, especially for putting these things on, and I'm looking forward to next week. And
of course, man, this is going to be fun. Next week's going to be really cool. And for you guys, make sure to follow Kevin at KG Bull and Bear on Twitter. Also, make sure to hit the notification bell on these subscribers on YouTube. You guys don't really get notifications like you used to. So try to hit the notification bell, and we'll pop up soon. Shout out to the cat for hanging out the whole time. And we'll see you guys soon.